Welcome back, Alpha Hunters. The market is closed for February the 3rd of 2023, and it is the first closing Friday for February of 2023. So let's get into what went on this week. Not much went on this week. Oh yeah, a whole bunch of things went on this week. So you were in for probably a little bit of a video, but I'm going to try and keep it moving, just kind of get the main points kind of going through a lot of the different things. And we'll take a look at Fed. We're going to take a look at some jobs numbers. We're going to take a look at some of the bigger earnings for the week. And then we're going to finally breathe and kind of get past some of this and go into next week. Alrighty. So let's get to talking about how this week played out. So Monday, we gapped down a little bit from last Friday. So over the weekend, we had a nice little gap down. Traded lower. It's kind of surprised we traded as low as we did. Tuesday morning, we came back out and just kind of traded back higher. Very, very nice buying action that we got to come in on Tuesday. Then as it made it definitely within striking distance to come snag these highs. Now, this high right here, this 408.18, this little gray line here, this was last Friday's high. This lower blue line here was the high from December, and this upper blue line was the high from September. Okay, so the reason why I kind of put them out there is just so that we know the different price levels that we're looking at. So kind of the planning going into this week from last Friday was I kind of thought the market would snap up, snag these highs, and I thought it would trade back down. Now, I thought it would do that on Wednesday, but we saw the market actually come back through on Thursday morning and have that gap up, okay? But let's just go back to what happened on Wednesday. So Wednesday, not much happened. Nice little trade down sideways action. We got a 25 basis point increase from the FOMC on the Fed funds rate. And then Jerome Powell did his press conference about 30 minutes later. That's what you see here on this green candle. This is when the press conference started. And it was kind of interesting. The beginning of the press conference, typically we'd seen in the past several FOMC meetings, we'd seen the market run up whenever the rate hike decision was announced, and then we saw the market sell off after. So basically when this green candle came in, this is typically when we saw the market kind of sell off. It was going to go one of two ways. It was either the market was about to get really crushed because we never really saw the market really jump after the rate hike decision, or the market was waiting for the press conference to really turn bullish. Now, obviously, you can see what happened as we got into the press conference. The first 5 minutes were actually this lower wick here. This is about the first 5 minutes, and then the next 5 minutes to make up the whole 15 candle here were just screaming bullish. And a lot of it had to do with Jerome Powell had just a starkly different tone from what he has had before in his FOMC press conferences, or even the Jackson Hole press conference back in August. He came out with a much more subdued tone. Previously, when he's come out, he's been like, we're going to crush the economy. We're going to have job loss. We're going to have a bad economy for a while. We're just going to have to deal with it. He was kind of talking like a parent on a bad day telling you to clean your room or you're going to get a spanking, right? That was very much how he sounded before. But this time, he was very chill and relaxed and calm. And that was just kind of his demeanor this time. So the market initially very quickly picked up on this. And another thing is he did mention one word that the market did pick up on that he hadn't mentioned before, and that was a deflationary environment. So between his calm demeanor, acting like, hey, you know what, our plan is working, things seem to be going according to plan, and mentioning the deflationary environment, that just sent the market on a tear. It just went straight up. It did come snag these highs from December and September, and I was really watching here. We pushed back down. We almost closed back below those December highs. We did close below the September highs, but then we get to the after hours, and this is where Meta came out or announced two big things from Meta's earnings, which were they're going to start cutting costs on their investment into the metaverse, which was a big deal. Stockholders loved that one. And the second one being a $40 billion buyback on shares. So those two things really sent the market bullish on this gap up here. And yeah, I mean, the market didn't even quickly get back below here. If it would have quickly got back below here, you'd have known the market was in trouble. But it went on a little bit of a run here. And then around the middle part of the day, it got over 418. And this line here is also pretty major support and resistance area around the 417.5 area. And this is a pretty important area because you see we didn't hold over that. We got over it and then we came right back down. And then we went into earnings then Thursday night, and we had three major companies. We had Apple, Amazon, and Google. They all missed on earnings, so we had a little bit of a gap down. But notice where we gapped. We gapped right on top of that September high. Momentum had shifted at this point in time, right? Momentum had shifted. It got bought straight up for about an hour and 15 minutes. And then for a couple hours, we didn't do much. We just kind of hung out, went sideways, tried to break down, got bought up, didn't take out the day's highs, and then it just slowly ran over and just kind of had some steam going even lower and got back down to the daily lows, pretty much to the open, snagged the daily low right here about an hour before close. Pretty much ended towards the bottom end of the session. So this was a very important week to watch where we closed, since we did get and hold above these highs from the past 4 or 5 months. Now, not only did the market hold over these highs Thursday, but it held it over Friday, which is the weekly close. Now, that's a big deal because a lot of people are now going to see that as a weekly close over those highs. So it is very important to see what we do early this next week. Do we get back under these highs early this next week, or is this a retest and we push higher? So we're going to have to find some things to kind of get an idea of what the market's doing, if you should be buying it right here or should you be waiting. So we're going to have to take a look at some things, okay? So taking a look here at the dollar, the DXY. So this is going to be something that I was really watching this week, especially Wednesday as we were breaking down after the FOMC raised the Fed funds by 25 basis points and the press conference. We just dropped off here on the dollar. So we dropped off. We got below a very strong support level, and not only did it get below, we closed below it, and then the next day we opened a little bit lower here on the DXY and traded immediately higher. So what's really interesting about the past like 4 to 5, 6, 7 trading sessions here is we were getting compressed coming down under this 10. We looked like we were probably going to pop higher. We rejected. We broke down, took a level, immediately rejected that, and have now taken and snapped higher above what was that previous pop. So it was kind of like a double break here. And this is something to be very, very, very mindful of on, as if the dollar continues to trade higher and equities like the SP 500, the Qs are not really breaking down as hard, or they're just kind of trading sideways, or maybe they're trading a little bit higher, but the dollar is just screaming higher, or maybe even just trading higher. It doesn't have to be like screaming higher like it has been over the past 2 days. I would take that as a very clear sign that the dollar is front running the SPY. And the reason why I say that is because if we go back and look at September, the DXY, the dollar here, this topped out before the market bottomed, remember? So the market bottomed on October 13th, which was this day. This was a big gap down day on the market and the SPY. Check it out since I'm not going to bring it up here, but the DXY was already topped out. The market topped out late September here. So this is just a big possibility that maybe the dollar is going to front run the market and let you know, hey, you know what? The market's probably going to sell off here. And a lot of it might be is the market's really extended and you're getting a lot of people saying, you know what? I don't trust the equity market right here with how much it's moved up already over the past 5 weeks or so, and they have to stay invested. So they're just going to move over to the dollar, which is probably why you are seeing dollar strength here over the past 2 days. And notice that we started seeing the dollar strength as the market, the SPY that we were just looking at, got over those December and September highs. So very, very interesting to kind of see that flip here. Also, kind of interesting note here is the dollar, with the December lows kind of that it set in, the dollar broke those down well into January. For most of January, it got below those December lows, and the market only recently just took out those December highs. So be mindful here, okay? Just be watching the dollar. If the dollar's moving up and we're not really getting crushed on equities, could just be an issue for equities maybe coming forward. So along with the dollar, we're seeing some pretty good activity here out of the 10-year rate. So the 10-year rate's popping pretty good here. So it'd be kind of interesting to see how far this goes. I'm not going to really watch this one as much. I'm going to keep an eye on it, but it was really kind of interesting to see that we didn't make a new low here over the past, couple of weeks compared to that January 19th low and yesterday, Thursday's low, but we did form a nice little morning star reversal easily. So we'll probably see the rates, at least the 10-year here, probably just continue to move back higher. So I'd imagine a lot of people are going to be talking about the dollar, but the other one they're going to be talking about is GLD or gold. Holy moly. This thing has been on just an absolute tear ever really since the bottom it put in November. Just been every day. It almost seems like every day. It seems like every day. I know it's not every day, but just been absolutely grinding higher. And then a nice little breakout, and obviously inverse with the dollar, with this thing breaking out higher on Wednesday and then breaking down really hard Thursday and Friday, pretty much just opposite the dollar and dollar's price action. So we're probably finally going to get that pullback here on gold. If you've been looking for that pullback like I have been, I've been waiting to see that kind of pullback on gold, and we're probably going to finally get it as the dollar probably continues to push higher. So this is going to be looking a little bit more attractive here coming forward. I wouldn't say I would be hopping in right now, but yeah, huge breakdown here on the GLD and gold. So taking a look here at the HYG, the high yield corporate bonds, they dropped off really hard on Friday. So this kind of tells you, hey, you know what? They broke out a little bit on Thursday. They were kind of matching the stock market, but man, they dropped off really hard. So, the bond market people might be telling you, you equity guys are a little crazy for pushing the market up that high because they are not really believing it. So watch the HYG. If we take out these lows that we put in here over the past couple of weeks on the HYG and US equities, the SPY, not really done that yet, could be a pretty good front run to maybe possibly even get bearish on US equities. So there's a lot of things to kind of be watching. A lot of things kind of start to look a little bit counter to their past couple months of trends. Definitely could see a little change of pace here going forward. Now looking here at the XLY, XLP, this thing has been on an absolutely monster run ever since the end of December. Just, like up, almost parabolic up. And what's really kind of fun here is the XLY, XLP, which the XLY is consumer discretionary and the XLP is consumer staples. And they obviously do have a little bit of a relationship to the economy. XLY, is a little bit more of, hey, the economy's great and doing good. People are buying, not so much necessities, but a little bit more of the luxury side. XLP is a little bit more of the consumer staples, like your toothbrush, toothpaste, that kind of stuff. The stuff you kind of have to buy, soap, deodorant. That's kind of the difference between these two. But so this kind of gives you a sense here of risk on, risk off. And whenever this thing is going down, you get the risk off. Whenever you get this thing going up, the market's basically telling you it's risk on. And we've been on such a strong run, a huge pop, a little gap up. Man, this thing was a massive gap. And a lot of that had to do with, those earnings from Meta on Wednesday night. And this thing came right into this little double top bottom area. Right into it. And then obviously is rejected down from it. Obviously, we had some earnings and some other things kind of come out. So could be an interesting spot to probably see this thing maybe pull back at least some. If it's going to go higher, pull back at least some, get some steam and go back higher. But what's really interesting here is on the monthly. Look at how far this thing has moved. Just this snap up higher here on a monthly. And you know what? I can't think of another time where we've done that before on a monthly. I guess maybe this one back in July. Yep, look at that candle back in July with just huge correction back up into these, moving averages on a monthly time frame. And it's almost setting up kind of the same way this time, where, we had a huge move back up. Have, so far we have an upper wick on a monthly candle. We're 2 days into the month, so it's not a big deal. 3 days into the month, so not a big deal. But I'd be curious to see how, the month of February continues to kind of play out, because, we saw a very strong correction here on the XLY XLP relationship over the course of January. And we could now just get into that time period where we see it do one of these where it just kind of over the next couple of months just slowly starts to roll over and we get back into a risk off type of mode. Right now, I would say it's probably not a good time to be long on that XLY XLP relationship, but it's probably one of those you want to keep your eye on if it starts to roll over, the market's just in a risk off area. All right, so let's run through 4 of those major companies that had earnings this week. We'll start here with Meta. We'll go then to Amazon, then Alphabet, and then Apple. So Meta here, huge gap up. I mean, huge gap up. Obviously, I already told you, they kind of said two main things. They're going to cut costs on building the metaverse or cut back investment and costs on the metaverse. And then they issued a $40 billion stock buyback program. Man, I have a hard time with, Mark Zuckerberg changed the name of the company to Meta Platforms. And I really have a hard time that he's going to just give up on it that easily. This also is massively extended, so I could see taking a little bit of a bearish play here. We got two pretty large upper wicks here on Thursday and Friday. Came into some of these bottomed areas, bases where it kind of just came into. So I don't think right now would be the best of times to probably be looking to get bullish. At least want to see some of a pullback. If it's just more of a sideways pullback, let some of these moving averages catch up before it pushes higher. Sure, but I have a hard time believing that he's really going to cut back cost as much in the metaverse, or they're actually going to fall through completely with the $40 billion buyback program. So we'll see if all that kind of plays out. But they still missed on bottom line. Pretty large miss here on the bottom line. So yeah, I don't really kind of know how to play this. I do have a bearish play out here for this next Friday. Mostly it just has a lot to do with it's such a large gap up here. And if it breaks down, it's probably going to have quite a bit of momentum kind of just coming down. So I'll see how it plays out, but definitely wouldn't be looking to be on the long side here or bullish side. I'd be looking to, if you want to be bullish, wait for it to come back down at least a little bit. And if you want to be bearish right now, probably not the worst spot to maybe get a little bearish, as it is pretty extended. So it always depends on your timeline. But that's how Meta fared on earnings. Okay, so let's get into Amazon here. Well, they missed on a few things. They missed on cloud growth. They were not as strong in the consumer side either. So you also see here they missed on earnings big time. They almost had reported a negative number, but they did report a positive number. They did gap it down. You see the upper wick here, just like the rest of the market, they got bought up initially very strong on Friday, and then they, wind up rolling over in the second half of the day. So just kind of interesting to see that kind of play out. Obviously hitting the 200 daily moving average, hugely extended as well. A lot of things are extended right now in the marketplace. If you want to be bullish, right now is not the good time to do it. You know what I'm saying? Wink, wink. So, just give it some time to breathe. Let things settle out. Amazon is obviously a big one that needs to settle out and figure out, what would be some good entry points. It's been hugely volatile here over the past, week and a half or so. So yeah, it just needs to kind of get some steam. Obviously, you've had long-term downward trend lines that are coming down that they're just smacking right into. So yeah, it's not going to be an easy cake of just buy it and it's going to go up. This is going to take some time. It had some major breakdowns last year. Good old Alphabet. I can't say the G word because my phone will listen to me, but nice little gap down with a buy up today. It almost took out Thursday's highs, but it did take out the close on the high today and then reversed course and traded lower. So it was just kind of interesting to see, man, just everything was bullish. And this is what happened, when the market was able to break through those monthly highs that it had kind of put in before. I mean, the momentum shift in the marketplace was real. Like you saw it, like we opened on some levels on the market, like the SPY and the Qs, and all the momentum now is in the favor of kind of just buying the dips. And we dipped down this morning, we opened down, and a lot of things just got bought right up. So we'll see if it lasts, but a lot of things are definitely extended right now. And Alphabet here did have that second half of the day sell down, not nearly as bad as Amazon, but they're also seeing some competition, obviously coming from the AI space. A lot of people are following that whole chat GPT AI chat box kind of going on, and people want to know what's Google going to do to respond. So we'll see. They're supposed to be introducing some new changes to the search algorithm to kind of integrate some other features like chat GPT. So we'll see if that kind of plays out here in the next coming weeks. AAPL, good old Apple. Man, this one took a bite today. Wow. Today was really interesting, and I'm going to look at the last earnings it did. Today's earnings, nice little gap down, and absolutely got bought straight up. And today's price action is almost very similar to the last time it had earnings back on October 27th. I know it traded then the next day after, Friday, October 28th. So it was just kind of interesting that these two scenarios are almost very similar. They report Thursday after the bell. They both have a little bit of a gap. I think, this one back in October, it gapped up and just ran. This one, it was a little bit of a gap down and still just ran bullish. So, but they both opened almost at the same price level. They both ran almost to the same exact high. It was just a few pennies difference, a little bit lower of a close, but nothing like what you saw from Alphabet, of what you saw from Amazon with those huge upper wicks today. Amazon even actually broke down and went negative on the day, but Apple still with this full-bodied candle here. So what happened last time is, the next 4 or 5 trading sessions, we saw AAPL just absolutely get crushed. And are we going to see that again this time? It's going to be real interesting to see what happens here on the marketplace over the next few trading sessions, just on a technical level, but here on AAPL as well, as this was hugely extended. One of the things that actually Steve Jobs did mention on the press conference was he said, if FX wasn't such an issue, now FX is talking about foreign exchange, wasn't such an issue, then we probably would have seen growth in a lot of areas, a lot of regional areas, across the world. Now, I have an issue with that because if you go back and look at currencies, we were kind of doing that today on the live stream. Q4 was not a time period of dollar strength. That was actually dollar weakness. And I would say from Q3 to Q4, it was like a net even, maybe even a little bit of a reduction on the dollar strength. So I don't really know what he's talking about as far as like, FX, strength or whatnot. Well, that was kind of a headwind, but it was just kind of interesting to hear him say that. And so the fact that he's saying that kind of lets me know that, yeah, he's seeing some issues out there, but he doesn't really know what it is. And it's just kind of like one of those things. Okay, we'll just blame it on foreign exchange. It just seems like a scapegoat, but I don't think that's the real scapegoat. Okay, so definitely pay attention to that. But if that is the problem and we see the dollar start to rally, watch out. That's all I'm gonna say. Watch out. Alrighty, so obviously you can see here some of these daily candles that came in on the SPY. We closed right above that September high. I mean, it wasn't too far off. And, I was expecting us to come back and down. Now, we're not totally out of the woods, or the bulls are not totally out of the woods yet. So you got to see really a bounce. You cannot let the bears get back below these levels. And I really kind of thought if we got back below that September high, we would take out that December high and come right back below it. But late in the trading day, the last hour, we did actually get below that September high. And then it kind of got enough steam to get back up over it in that last hour without getting back down to that December high. But we'll see how it plays out here over the next Monday or Tuesday. But one of the things that I kind of want to talk about is I don't expect a lot of movement here over the next week. Just looking here at this weekly, this is a large weekly candle. We got a large upper wick. We have momentum in the bullish direction now. We don't really have major catalysts coming this next week. Not to say that there isn't catalysts, but there isn't major ones. Not like what we just saw this past week. So we got a huge candle here on a weekly. We got a pretty high wick here. The bulls are going to want to keep it above these previous monthly highs. The bears are going to want to try to get it below. So you are about to see the fight. You're about to see the fight. And all I can say is grab the popcorn, okay? That's about all I can say, because the bears get it back below, especially here over the next couple days, trading sessions. We can definitely see to where we just slowly chop down. And this plan, kind of what I was mentioning last week, kind of play out. I think if the bears do get back in control, this will probably happen, and probably in a pretty rapid pace, because once you break momentum, the momentum coin flips really quick. And we have seen that before in previous bull and bear market moves, as we had a very strong one back in the summer where July and August we saw a very strong move on the market, and then once that momentum broke, we saw a very strong move back in the bearish direction. So yeah, it could definitely go either way here, but definitely be paying attention to these levels. If we do get back below them, it's going to be really difficult for the bulls to kind of continue to sustain any kind of move higher later on. I do think we'll probably break down, because to me, I wanted to see a little bit more of a break and hold up, and then an early week next week retest lower and then a bounce. But kind of where we opened here, I can almost see it to where Monday we gap down below this 410 level and kind of just hang out, and then maybe start to roll down later on in the week, maybe Tuesday, Wednesday, Thursday, something like that. So really watch out for early week next week. So some of the bearishness maybe coming in, and we'll see how that plays out. But really, this is the zone I'd be watching. This is the zone. If we can hold over this and we start to like just consolidate here over a couple days and then slowly push higher, all right, Bulls probably going to get it, at least for now, and they'll just kind of continue to push higher. But this was a huge close, no doubt about it. You definitely got over those previous monthly highs, and I would just be really paying attention here and the dollar. Here and the dollar. Because if the dollar's running hot and running bullish, and this thing isn't really breaking down, it's kind of slowly chopping up or to the side, yeah, this thing might play catch up real quick in that bearish direction. So, but I'm not really expecting a break of the low or the high of this past week, really in the next week or maybe even 2 weeks. If it happens in 2 weeks, it'll probably be later on in 2 weeks. Maybe week 3, we probably see us actually break the high or low here. Alpha hunters, it was a busy week. There was a lot going on. We got a lot that was kind of said. I'll go into a little bit more detail next week about some stuff, but this is already long enough. There's already enough kind of going on this week. So we'll look at some other things next week. But Alpha hunters, that's what I'm watching. So take care and have a great weekend. Alrighty, take care, Alpha hunters.